guys, good morning, April 3rd, 2020. Are you ready to rock and trade like a rockstar today, guys? It's a Friday. 13 market moves analysis for Friday, guys. We're predicting that the market is going to stage a solid move to which, if you understand the 13 markets move formula, that is the type of move that creates some of the best trading opportunities for day trading Fridays. So without any further ado, they just released the job report, and of course it's bad. I mean, what did you expect after 6.6 million jobless claims, which we predicted accurately about a week ago? Now, the important thing to understand here is that situation is not going to get any better when they report the next job number. So temporarily, you may have a small bounce, okay? And I'm going to show you exactly why the psychology of trading Thursday through Friday, tracking back some of the behavior from last week and laying it over into next week makes trading today a very, very easy day. Now, some of the favorite trades that we got going for today, guys, short the hell out of Apple. Tesla, guys, Tesla is bouncing like crazy pre-market, about 80 bucks. This is one of the best opportunities. That probably could be the trade of the week. Short the hell out of Tesla on any bounce. So Tesla basically releases the numbers yesterday saying, hey, we had a pretty good quarter. We delivered a bunch of cars. Wall Street gets excited. Well, you know, you don't have to do a whole lot to get excited about Tesla on Wall Street, right? But understand this, we're in a different type of market environment from where we were a few months ago. So any bounce in Tesla is to be shorted. So far pre-market, I'm recording this, is trading about 528. Guys, this is an awesome entry. I hope it doesn't go lower than that. I hope it opens around 530. As soon as you see that, just buy some damn puts and stick with them for the rest of the day. So Tesla, understand this, it's not about how good the report was so far. It's not about how many cars they delivered in the last quarter. Who cares? The only thing that really matters from this point on is how many cars Tesla is actually going to deliver going forward from here on. And trust me, those numbers are not going to be good. The production has slowed. All the hype that has been priced in the stock, which we talked about in multiple videos, okay? The truck, all this crazy stuff that everybody was so excited about, all of that stuff is going to be postponed now. So there's no reason to buy Tesla shares now. But any bounce in Tesla represents a great shorting opportunity. Now, with that said, nothing has changed in the travel sector, guys. All the airlines, we're still short them. Have you seen the freaking drop yesterday in RCL and, and CCL, all of these stocks, guys, they keep grinding lower. They keep moving lower. So the strategy is very simple right now. Just short the damn bounce, okay? And, whoo! Man, that LK could go down to $2, guys. LK, $6 strike puts look like they could make a ton of money today and going into next week. Zoom puts, BKNG puts, guys, there's a ton of opportunity. Apple, LRCX puts. Okay, so I don't know how many times I got to say, just focus on shorting the bounces. When market hits a certain level, okay, just buy puts at those levels. We've covered the levels multiple times in the last few videos, guys. So let's take a look at this behavioral pattern. So last Thursday, okay, Wall Street expected a huge number, a huge bad number, that is, as far as jobless claim concerns. We did get a bad number, over 3 million. So the initial response to that was the move lower in the markets, followed by a spike higher. Again, for those that are new, you may be trying to decipher through these numbers, and this is why sometimes stock market don't make a whole lot of sense if you're just a brand new trader, because what you're focusing on is the news. Oh, are the news good? Are the news bad? That just don't fucking matter, okay? The only thing that matters is the reaction to the news. So last week, we had the reaction to the news on Thursday, because jobless claim numbers, they come out every Thursday morning, right, about 8:30. So the initial reaction, horrible report, initial reaction is bad. The market bounces. Okay, now understanding this is actually a characteristic of a move 11, which is the top information, predicting a further development in the markets to the downside, not the upside. Now, we had a good catalyst the next day, last Friday, which was the stimulus announcement, final approval of the 2.2 trillion stimulus package. So we had a delay effect. The approval was announced around between 2:30 and 3 p.m., so the markets didn't initially react a whole lot, but then it did move higher. Right around 3:30, we had a huge pop followed by a huge drop. So this is the behavioral pattern from last week. And it's not going to differ a whole lot this week, because if you look at yesterday's reaction to the jobless claims numbers, okay, it doubled. The number of people applying for unemployment doubled from the previous week. So really, if you combine these two Thursdays, you combine these jobless claims, guys, 10 million people applied for unemployment. And yet, what do we have? We have, and that's horrible, right? But what do we have? We actually have a rather positive reaction. The market drops and then it bounces strongly. Okay, the importance of how to trade today is right here. If you understand this, okay, you're going to trade like a rock star today. So this is what you need to focus on. The numbers, the job report comes out at 8:30. And for those of you who don't know, the job report, if you're new, it comes out the first Friday of every month. So the next one we're going to get about a month, exactly a month from now. So what you're looking at is 8:30, reaction of the market to the job report. We already know, okay, that the initial response may not be negative. Okay, the initial response could be going just slightly up to sideways. But what happens next is key. Instead of looking at this time frame of 3:30 from last Friday, it's important for you to understand that this bearish reversal is likely to happen between 10 and 10:30 as it move to formation. So understand that this is your ultimate entry of the day, and then you just basically ride all the bounces, short pretty much every bounce on the way lower, and cash out on any drops on the moves higher. So basically, this is how today's move is going to look like. So job report, okay, so far we're trading around about 2,500 as I'm recording this. So job report, you can possibly get a pop, maybe 25, 26, which coincides with the tunnel that we've been presenting to you guys multiple times throughout the last 10 videos, right? So 25, 26, that's the area where you want to short. You want to buy puts right here. And then give the market a chance. It's going to play with your head a little bit, your psychological tricks. Every time it bounces, you're going to be like, oh, man, I got to buy puts. Do exactly the opposite of that, because you're in a freaking bear market right now. So anytime it bounces here, you want to short it. Be a little patient. Give your trade some time to develop, and then it's going to do this basically throughout the day. So what's possible? I know 24.24 is kind of way out there, but what's actually possible, because this would be like a 100-point drop. All right. So, but what's really possible, we can actually end up at 23.70. Huge sell-off going into the close is definitely not off the table, guys. So focus on this pattern. This is how you know how to day trade today. Very easily, guys. Somehow, maybe a friend shared this video with you. You don't know the 13 markets. You got to, guys, you got to study them and understand them in order to understand your daily game plan of exactly how you're going to trade intraday. Some things we mentioned in the last few videos, guys. So the first oil company files for bankruptcy. We told you about this ticker actually filing for the bankruptcy 3 weeks prior to it actually announcing. White & Petroleum files for Chapter 11. Okay, one very crucial thing you should understand about the delay effect when it comes to oil prices is, if you study the history, okay, there is a delay effect between oil prices dropping and the number of companies filing for bankruptcy. So a good example would be, take a look, last time oil actually dipped in the 20s was in 2016, to be precise, February 2016. Oil temporarily, literally for just a day, it hit like 27, 28 level, 30. It didn't stay here very long. As you can see, it bounced out within, very short amount of time, was back trading to 40s, 50s. So interesting fact is this. Yes, we had a spike here in companies filing for bankruptcies, but there was a lot more companies filing for bankruptcies right here in September. And this may look confusing, again, especially if you're brand new. You may be thinking like, what the hell? This is where oil prices drop. Wouldn't that, this where you'd have the most companies announcing bankruptcies? No, it actually happens with a delay effect of what, about 8 months here, right? So while oil prices actually stabilize and they move higher, this is the greatest point where the most amount of companies actually announcing bankruptcies. Now, this time situation is significantly worse because, as you can see here, we pretty much stay over 30, even though the downtrend in oil in 2014-15 prevails, right? But once we hit this bottom, we don't stay here in the 20s very long at all, literally. I remember trading that, and we're there like 2-3 days. That's it. And so all of a sudden, in this situation, what's different, guys, is now we've been trading for about 21 days. Oil's been trading at like 31 or under. So the point is not whether oil is bouncing today, but the fact that oil has been staying here. I know this is a multi-month chart, so this doesn't look like maybe a big time frame if you're looking at this chart. But if you pull up the the daily chart, like you're going to be seeing clearly that this move right here, guys, it's now been happening for about 3 weeks. So the longer oil stays under 30, the greater the impact of the number of bankruptcies that the oil companies are going to be reporting. And please understand, not necessarily today, not necessarily tomorrow, but with the delay effect of up to 8-10 months. So the importance of understanding that is, yes, there's a lot of oil companies going to be shutting down. There's a lot of people going to be losing jobs. And the job report that we're viewing today, minus 701,000, okay, does not include any of these jobs that will be lost, not necessarily as a result of the coronavirus, but as a result of oil prices staying for a much longer period of time under 30, okay? And more importantly, to understand that this situation could actually get substantially worse, okay? Trump basically trying to pull off the same type of drama he was doing during the tariff war, right? Do you remember we actually posted a few jokes, Trump negotiating with Xi, and like Trump is calling Xi, and then he says, oh yeah, he announces in the news, oh yeah, we got a deal, we got a deal. Then, you know, clearly they ask Xi, Xi's like, no, I never talked to him. All right, so this is the same type of situation. Yesterday, Trump goes out there and says, hey, we got a deal. We got a deal with Saudis. They're going to cut their production. And look, just like remember, not so long ago in the tariff war, he was throwing like crazy fucking numbers out there. Oh, China's going to buy 50 billion of U.S., farming production, okay? And, you know, after all said and done, the number was nowhere near that. So he likes to start out with this big number. So here's how crazy this shit gets. He goes yesterday and he says, we got a deal. We're going to get Saudi Arabia and Russia to cut the oil production 15 million barrels a day. All right? So he's wild, crazy stuff out there, okay? There's no freaking way they can cut the production by that much. That would literally mean that, guys, they would have to cut their production by over 50%. This absolutely is not going to happen, okay? So he starts with these crazy numbers. So maybe there is some kind of deal, but the fact that oil futures were bouncing yesterday and then dropping, it's a similar type of reaction we were getting when Trump was doing his negotiations with Xi on the tariff war, back and forth. Do you remember how any positivity in the news, the market was spiking higher? And then we were posting a bunch of videos saying, short the bounces. Anytime Trump tweets, yes, the market goes higher, but then what is the next move? See, to focus on, as a trader, what you want to focus not on what's now, what is the next move in order for you to make the money. So the next move is after the bounce, it's the drop. So target the bounces to actually short the market, because any kind of action from Trump, tweets, you know, any interviews where he's going to say like, hey, yeah, we got a deal. Guys, there's no reason to trust this deal. If there is any kind of deal, just think about it. Saudi Arabia and Russia couldn't agree on any kind of production cut. And so now, based on what Trump is saying, all of a sudden they're ready to cut their production in half? Hello? All right, so basically, how do you use that information to trade the market? Well, anytime you see Trump tweet anything positive about oil, oil is going to do this. It's going to pop. Okay? Oil and, you know, the market's super correlated lately. So you could expect S&P 500 to do the same thing. But understand what happens next. Okay, so all bounces on any kind of Trump tweets, you want to short that. And along with that, you want to short the S&P 500 or the market, whatever your instrument that you want to use to do that. Okay, because the initial response higher is going to result in a drop. The initial response higher is going to result in a drop. So understanding this gives you a really simple and good plan of action to just execute. If you execute that, day trading becomes very, very easy and very precise. Okay, the trading tunnel will talk a lot about this. So there is a chance we can actually visit this lower part of the trading tunnel right here, 2424, possibly even drop under 2400 at some point today. You want to short stocks in this area, 25.03 to 25.20. Anytime we trade right here, guys, that's your shorting opportunity. That's where you want to pull the trigger and buy puts. We talked about the historical analog multiple times. Guys, yesterday we had a move 8, and that gives us high probability of a move 2 or 11, so we would assign an 80% probability of move 2 today. April 2nd, yesterday was a move 8. Basically, this is how it moves, right? So initial drop in response to the jobless claims, absolute record set, over 6 million jobs lost, over 6 million jobless claims filed, and we get a super nice bounce right out of the gate. Pull back a little bit, make it on the bounce. So the trajectory of these bounces, they're pretty much in straight shot at a 90-degree angle, which makes it a move 8. 2-day sequence is 3-8, guys. Understanding this, 3-8 overall is a bearish sequence despite of a green move 8 here. So 11-7, 3-3-8. Overall, it's a bearish sequence, guys, pointing to a bearish move like a move 2 today, possibly resolving in even a bigger drop on Monday. But again, we're not expecting 3,000 point daily drop by no means here. We're targeting certain levels, which we've covered multiple times. If anybody's still struggling, please make sure you click the link below this video, schedule an appointment to talk to a senior trader here, and we'd be happy to try to help out. So overall, what we've got going is a situation that resembles head and shoulders in the market. So when you look at this sequence right here, 11-7, 3-3-8, guys, this is how it looks on a 5-day, 15-minute chart, and it highly resembles a head and shoulder pattern, which typically has a high probability of resolving into a move lower. Now, sometimes this shoulder could be extended, meaning we can go sideways for some time before the drop actually materializes. So understanding that is important. All the prior days, all the prior moves, we've been able to spot that head and shoulder pattern here before within an overall bigger move 11 formation. So magnitude of the move 11 has been expanding, and that typically leads to a further drop in the market. So last day down on the VIX, possibly today, guys, the VIX could reverse and move higher and regain its ground. So we are saying there is a possibility for the VIX to actually move higher continuously for about 5 days in a row here, revisiting some higher levels. With that said, guys, earnings season is coming up. If you don't understand how to trade earnings, if you don't have a solid game plan how to trade earnings, make sure you click the link below, fill out your information, get in touch with a representative here, and get your questions answered when it comes to trading earnings. Take action today, guys. I wish everybody a great weekend. Happy trading today.